Yeah.
Hey everybody, so I want to welcome you to the webinar. Today we're going to be learning about how to buy a home for the first time, focusing on people in Florida and focusing on 5 mistakes that you can avoid. I want to just check people, hit a 1 if you can hear me, and it looks like people are hearing me okay. And I usually like to check in and see where people are joining from today, so go ahead and put that in the chat. I'm seeing we got someone from Orlando, we got Miami, we got Cape Canaveral coming up. That's super awesome. Great to see you all today. And as we get started, I just want to go over some of the welcome things that we can do today. We're going to have questions and comments in the chat. We're also going to ask you at various points throughout this webinar to share aha moments. So as you're listening, if you hear something that's completely new to you, put it in the chat with an aha. It's going to be awesome. This presentation is going to last for about 60 minutes. We're going to make it packed with information that is going to be really useful for you. We want you to feel like a home buying pro. We want you to have the beginning of a vision of what your plan looks like to buy a home by the time the 60 minutes is over today. We're also going to be having a question and answer session. So jot your questions down, put them in the chat box. We'll be sure to get to them at the end. And we are having a $25 gift card drawing for those who have joined us and who are going to be here through the end of the session. And I'll tell you a little bit more how that works. It's going to be for a $25 Amazon gift card. You should be here the whole hour, participate in the chats, sharing your aha moments, sharing comments. My team and I will go through the footage after the class to see who's participated, and we'll email everyone who's a part of this live presentation by Friday to share who the winner is. So the point of the gift card drawing is for us to encourage what we want, which is rewarding the positive vibes that you guys bring to this room. So once again, thank you all so much. And I'd like to kind of start this off by asking how you feel. And I'd like to have you guys put that in the chat box. Anyone here feeling concerned, stressed out, intimidated, anxious, and uncertain about buying a home, about what you're feeling right now? So I'm seeing a few of those words popping up in the chat. I'm feeling anxious. I'm feeling, hey, I don't know what to do. Can I even get a house? I'm seeing this coming up in the chat. And the good thing for you is that I'll be here to help you through that process. A little bit about me before we get going, just so you know about who I am. I was born in Fort Lauderdale, Florida, spent my childhood in Cocoa Beach, and that's where I live now. I know that I started my real estate journey when I had no savings. I was only making $45,000 a year, and I had no knowledge of how this could get done. So I was where a lot of you guys might be now. Since 2016, I've been investing in real estate, and I've actually built my portfolio to include over 11 properties across the US and Mexico. And I joined Momentum Mortgage to bring the expertise that I've gathered over those 10 years to Floridian homebuyers like yourself. And I'm not alone. Part of the Momentum team are some of the folks you see here. Each of them has over 20 years in the business. And they are providing support and working as a team to get you and anyone who works with us fast pre-approvals, quick closings, and the best terms and rates for your situation. Just a little bit about a former employer of mine who really loves my work. He was ready to invest in a new city, and he immediately called me up. He was my boss, and he said about me that I was able to close him an apartment in no time. I'm knowledgeable, proactive, and professional. So that's what my last boss said about me. So I hope that I'll be able to serve you as well. So just to get started here to kind of bring your thoughts together, what are the steps to home ownership? Well, I've boiled it down to 3 simple steps. 1, come to this class and learn everything. Hey, you're already doing the first step. That's amazing. The second step is to get a pre-approval with your mortgage broker. And that's something that I can help you with. All you need to do is book a call with me, and you can see my booking link right there. I'm throwing that in the chat box for you as well. And that's going to hook you up with my calendar. You can find any time to chat with me. We'll go into a little bit more about how that call will go later. But that is the second step, because when you get pre-approval from me, you're going to basically have the cash in your wallet to go buy a home. And then the third step is to house hunt with your realtor, where you search and find that house you want, you put an offer in and you negotiate it. You get that home inspection. If it's a condo, you check out the condo docs, you finalize that financing with me, and you sign at closing, and you're ready to move in. So these are 3 easy steps. We'd love you to take them with us today. So before we start about the 5 mistakes that home buyers make, we want to get clear if buying is something that's for you. Obviously, all of you came here today because it's something you're considering, but perhaps it's something that you might want to get a little bit more clear on. So if folks wanted to share why you're interested in learning about buying a house today, I'd love to put that in the chat. So I'm starting to see a few things in the chat right now. For instance, people are saying that they are they're interested in having a place to call their home. They're interested in seeing if it's cheaper than renting. They're tired of having their landlords tell them what they can do and can't do. So those are all very valid reasons. I want to thank you for sharing. Another reason that people might want to look into buying a home, they might care about creating wealth. And I want to go into this reason a little bit more. And I see I've had a few folks just join us. And Ash, for instance, was saying he might want to build equity, and that's why he might want to buy a house. So that goes into this wealth thing. So we encourage folks to be writing into the chat and want to thank you about that. I wanted to share this amazing graph with you, which is the difference between the net worth between owners and renters. And we've got 3 different years here to show you how that might have changed over time. What you're seeing in that little bitty short box is how much net worth your average renter has. $7,300 in 2019, $10,400 in 2022, and just $10,000 this year. That's how much money that they have after they take a look at their savings and subtract their debts. Whereas when you look at homeowners, they're at 200,500 in 2019, and all the way up to 430,000 in 2025. So you're seeing over 40 times more net worth between an owner and a renter. How can you get there? That's what our webinar is about today. Unfortunately, however, the other half of that, when you go back to those renters, is you get news articles such as this one from Money Magazine. Over half of older employees plan to work indefinitely and never retire. That will happen when you don't have savings and a safety net in place, and you don't have the net worth to take care of yourself during retirement. So just to emphasize that a little bit more, I want to go over 2 different paths here. Starting in 2025, we've got 2 30-year-olds. One, for this example, stays a lifelong renter, and the other becomes a homeowner. So the lifelong renter is paying $2,500 in a month in rent for a 3-bedroom, 2-bathroom. It's the kind of place they want to live in. They're dealing with rent increases of 3.6 per year. And over 30 years, that equates to $1.5 million they have spent on rent, money that they will never see again. For the homeowner, he's decided to buy a home. He's got it with 1% down, $3,000. That is a little bit more than your security deposit. He decided to buy a $300,000 home. His monthly payments are around $2,500, including all those taxes and insurance. Yes, his monthly expenses are estimated to go up around 1% per year due to increasing taxes and insurance. That's taxes and insurance generally are always going to go up. However, when we look at how much he will have spent over 30 years, including taxes and insurance and some maintenance, he will have spent around $1 million, which is $500,000 less. And that's pretty exciting when you can own your home and then spend $500,000 less, and you still end up owning it. So again, let's go and check out the renter. At the renter, it's time for him to retire. He's 65. Now he needs to downsize because he can't afford to live in a large house anymore. He downsizes to a 400 square foot studio and is still paying $1,000 a month, which would be about $2,500 a month and $2,055. And it's hard to find that kind of money on Social Security alone. So he's having a hard time doing that. That's why he might choose to work forever. Whereas let's go back to our homeowner. his property value has increased at least on par with inflation. So now his home is worth around $758,000 in 2055 dollars. His mortgage has been paid off, so he only has to pay taxes and insurance, which are estimated at around $400 a month in today's dollars. So $400 a month in today's dollars versus $1,000 a month for a studio is much more affordable. Not only that, he can have, when we go here, we can have access to different programs such as the reverse mortgage, which allows the homeowner to take out that equity, use it as cash to supplement any Social Security or retirement savings that he has. And he can still leave the home as inheritance to family members or to charity as in a part of his will. So after seeing all that, who might want to be a renter or homeowner? Which life would you rather live? Tell us in the chat. We're checking it out there. I just want to welcome a few other people. So check in the chat if you'd like to be a renter or a homeowner considering these kind of possibilities. We've got homeowner for sure. Perfect. So now that we've gone over some of the benefits about buying a home, are we ready to learn about buying a home and checking out the 6 mistakes to avoid? I added one because I always am giving bonuses. Now for the 6 mistakes to avoid. But first, almost all new homebuyers want to know one thing or 3 things here. What's the most expensive house I can buy? How much will that cost me per month? And how do I know if I can even qualify? Perhaps these are questions that you guys have. Do you want to know that? Let me know in the chat with a yes or a no. If you want to know personally for yourself, what's the most expensive house you can buy? How much will it cost you? And how will you qualify? Most people want to know that. And I want to let you know we can answer that for you. Perhaps not in this webinar, but I'm offering free consultations for a limited time. So again, check that, book a call with me, and we'll be able to go through and find out how much you can afford. And that's the point of a specialized session that we can have for you together with me after this webinar. All right, now let's go on to the 6 mistakes to avoid if you're planning to buy a house. The first mistake is skipping a plan for cash to close. So what does that mean? 70% of Americans think they need at least 10% down to buy a home. How much do you think is needed? Put the amount in the chat. So look, I'll be looking towards the chat to see how much you guys think is needed to buy a home. And at the same time, I'm going to let you know that most people are not putting 20% down on their home. The average down payment on a US home is 13%, but the average down payment by a first-time home buyer is only 7%. So you don't need to have 20% saved in order to get your home. So how much do you need to put down? Well, here are some very common amounts for down payments. If you do put 20% down, that's amazing. It's great if you have that savings. You can avoid PMI and you can take advantage of having a little bit smaller monthly payment because you're putting down so much towards your home. So your loan amount is small. However, if you don't have 20% saved, here are some other options for you. 5% down is a very solid choice. If you want to try and go lower, you could get an FHA loan, Federal Housing Association loan, which is 3.5%. It's definitely widely available. And it's also an option for folks with lower credit, generally down to 580 credit score. If you're a first-time home buyer and you're of moderate income, you might be able to qualify for a 3% down loan. And in order to qualify for that, you'll need to have 80% of your county's area median income. So for instance, in Orlando, in Cocoa Beach, in Miami, that is around $80,000 or less. And if you work with me, we'll be able to get you a program that can get you up to only 1% down. And that is because we take that 3% loan and our company is able to get up to 2% more for you as a gift, which is amazing. Let's look at an example of someone who wants to buy a home and they've come up with their cash to close program. So someone who avoided that mistake. She wants to buy a $300,000 home. She's working with me. We're getting her that 1% down payment program. So she comes to the table with $3,000. But there are other closing costs. I think we all know this. We've heard of closing costs or other closing costs, around 3%, we could say. So around $9,000. But her realtor was able to get and negotiate with the seller so that the seller could provide seller's assistance of 3% that will offset those closing costs. So in Anita's case, she's able to close with only $3,000. Want to remind you, this is an example only, and I would love to work with you to determine what your numbers are. And again, that booking link for me is going to be in the chat, and you can go ahead and click on it anytime you want during this presentation to book a time with me on my calendar that works for you. So let's see. I want to skip ahead to mistake number 2 that new home buyers might make, which is not getting a pre-approval from a mortgage lender. Well, who here has received a pre-qualification for a purchase that you want to make right now? You can say me or not yet in the chat. But I want to let you know it's not too late, and I can help pre-qualify you directly following this call. Perfect. I see Gustavo has a question. What tips do you have to improve my credit score before applying for a mortgage? We're going to go over that in this mistake right now, this mistake of not getting pre-qualified. So we're going to get you pre-qualified. First of all, why should you get pre-qualified first, even before you start to go out and look at homes? One, the most important thing is you will know how much you can afford before you're getting pre-qualified. Unless you are paying with 100% cash, you don't know how big that loan that you could get, how big that mortgage loan you could get will be. So that is why you need to get pre-qualified with a lender. The lender is going to be the only one who brings you back to reality and can tell you, I can get you this much cash, and here's how much it's going to cost you per month in the future. Next, that information is going to help you focus on the right market, the right geography, neighborhood, type of home for you. So you are not wasting your time, and you are seriously going to be getting that house. You're going to be able to shop with confidence. And when you are ready and you find a house that you think is amazing, you're going to be able to submit your offer with your realtor with your pre-qualification letter, which shows the sellers that you are serious and helps you get that property under contract. And you're going to be able to understand ahead of time what are the costs involved with buying a home so that you feel confident about making that switch from renting to owning. So again, here's where we talk about how do you even get approved for a mortgage? Well, we take a look at your credit and your debts. So we look at your score, and we also look at how much you owe and have to pay per month. We then team that up with how much income you're making, and we determine what kind of down payment you can make. We look at how much savings you have in your bank accounts, in your 401ks, and decide with you what kind of down payment you will want to make. And all that comes together to help us figure out what kind of loan you're going to get. We're focusing on your debt to income ratio because lenders care about affordability for you. Ever since 2008, lenders are not giving out loans that people cannot afford, which is awesome because you will not lose your house. We're trying to set you up for success. And in general, people cannot be approved for housing costs that will reach over 50% of your monthly pre-tax income. So again, if you're making around $5,000 a month, the maximum housing cost that you'll be approved for with a lender is around $2,500 a month. But that is assuming you have no other monthly debts on, to your name. So most people have other debts. Best practices say that people should not spend more than 30% of your pre-tax income on housing costs. But the reality is different, and this graph shows that over 50% of renters are spending more than 30% of their income on housing. And for homeowners, that's down to 30%. So in general, across our country, it has been more affordable to be a homeowner than a renter. And in general, even today, according to the US Census Bureau, in 2024, the median monthly rent is $1,369, whereas the median price of a home at current interest rates is less than $900. So despite what we're all hearing on the news, it can be possible to buy a home that is more affordable than renting a home. And I want to get into that a little bit more later, particularly narrowing down in Florida, where it can still be cheaper. And then you can still get all those other benefits and perhaps be paying less per month than what you're paying in rent. So let's check that out a little bit. I wanted to share with everybody, I'm looking at homes that cost $300,000 as a baseline, because that's roughly equivalent right now with our interest rates to $2,500 in rent. And when I talk to clients all over Florida, it's very easy for people to be spending $2,500 in rent. Many people spend less than that, but I find so many people who are like, I already spent $2,200 in rent. Then I start to say, let's see about getting you a home. So what can $300,000 get you in Florida? Here is an example of a $300,000 home in Palm Bay, Florida, which is in the Space Coast. Looks super nice. And according to the average payments here, if you put 5% down, that's $23.22 per month. And again, if you put 20% down, just to compare, you're now down to $18.44 per month. But I don't have 20% down. You might not. So $23.22 is what you're looking at. And you can go up or down from there based on your budget, what you feel comfortable with, and then what you're going to be pre-qualified for. For instance, in Brevard County, 726 homes are under $300,000, and that is 2 bedrooms or more townhouses and single family homes. So I'm not talking about small condos, which you can definitely get for less than $300,000. I'm talking about homes that are 2 or more bedrooms. When you go to Orange County, where Orlando is, you're at 355 homes that are 2 or more bedrooms that you can search through and decide which one you want. But I've got many people on the call today who are from Miami. What could you get in Miami? Well, I zoomed in and there are 100, and I went to condos here, 100 homes and condos at $300,000 or below in Miami. But when we expanded a little bit more up to Pompano Beach, down a little bit more to this area called Princeton, there are 3,500 2-bedroom condos and townhomes. So there's actually a lot depending on what your desires are. And that's why a realtor is going to be necessary. And I use 300,000 so you could get 2,500 in your mind per month, and you can go lower than that or higher than that. One more time. So if you want to get pre-qualified, I do want to remind you that we can do this for you. You can find your budget in collaboration with me by booking right there. I'm going to throw that in the chat one more time. So anyone who's here, go ahead and check that out. And I wanted to take a little break to tell you about the 3 phases of working with me. So when you book that call, here's what it's going to look like. I've got 3 phases. The first one is the research phase. So when we got on the call, we're going to talk about your goals and your beliefs around house buying and co-create that strategy together. Then I'm going to request you to send me 3 simple documents. This is just for the research stage. Your recent bank statement, 2 most recent pay stubs, and a credit report that you can download from any website that you like, such as Experian or NerdWallet. Then I'm going to get back to you with a basic budget of your max home payment per month and your maximum house price. That's going to help you move on to phase 2, where you can say, well, here's how much I can spend. Let me go out and look. So the pre-qualification phase, phase 2, where I'm going to be collecting the remaining required documents because we have a lot of due diligence to do as lenders. You're going to fill out our easy online loan application. The questions are super easy. You save as you go along, you press submit, no problem. And then when we're done with that phase, you're going to get that pre-qualification letter that you can use and update as you find properties within your price range. And that's going to let you go to the closing phase, where you're going to shop for your home and put in an offer with that pre-qual letter. Once you go under contract, we'll give you a loan estimate, which will be line by line of costs that you're going to face as you go to closing. And then we're going to be in contact with you regarding follow-up questions and details, and you'll close and have your very own home. So I look forward to talking to you, where we will start the research phase, talking about your home buying goals and collecting some of those documents to get us your basic documents. Now, moving on. I wanted to take a break here and see, did anyone have any aha moments so far? I want to share, we have shared a lot of information right now, and I wanted to know if anything so far surprised you or was new. You can go ahead and share it in the chat, and I'll be sure to highlight it for everyone. At this point, many people say, oh, it's definitely news to me that I could buy a house with literally $3,000 in my pocket. Yes, that can be new. That is often new news to you. I've had so many clients say, I thought I needed to have $30,000. No, I'm here to help you buy a house with less money down. So if you don't have the savings, we can still work to get you in a house. If you have the savings, let's use as little as possible or as little as you want to, and you can use those savings for other things, other investments, or other things you might need to buy, maybe college for your kids. So let's go and move on to the other mistakes that we still have. Mistake number 3 that home buyers make is going straight to your bank to look for that mortgage. I don't want to tell you how many times that this has happened to clients. They go to their bank because they feel like, well, I have my bank account with them. They will surely give me a loan. I will let you know that a large bank is like the most difficult place to qualify for a loan. You're just a number. If you don't fit into their box, they often don't have programs that will work. Some people get discouraged, they get rejected, and then they just think, I will never be able to get a home. So if you've been rejected by a bank before, or you know somebody who has, let them know that there are other options. Large banks are typically stricter guidelines, and large banks may not offer the same kind of down payment assistance programs, such as that 1% program that you heard about from me that Momentum Mortgage can offer you. You can instead use a mortgage broker instead of a bank. So for instance, I'm a mortgage broker. Mortgage brokers work with dozens of lenders. You will get a wider variety of mortgage products, which will lead you to the answer of yes, you can get a loan. It can serve unique needs like low credit scores or folks who are self-employed, have variable income sources. If that's you, you know it's you because it's been difficult. We also, mortgage brokers offer better potential for competitive rates and savings. So the National Mortgage Professionals did a study on this, and people who work with mortgage brokers save an average of $10,000 to $13,000 over the life of the loan compared to those using non-bank retail lenders. We also offer time saving and a streamlined process because you fill out one application and we check that around with the dozens of lenders in our network. You don't have to apply to 30 places. You can apply to one place and we will check you with 30 places. And mortgage brokers are known for having tailored guidance to walk you through the documentations and fee comparisons. So just the kind of value that you're getting here on this webinar. We will be walking you through the entire process. For instance, as I told you before, I have gotten probably 15 mortgages. I have 11 properties right now. So this is something that I am very familiar with, and I would love to get you in your first or next property. But if you're already pre-qualified, we can review your letter and give us a chance to do better because we most likely can. This buying your home is the biggest purchase you've ever made, so you want to make sure that you get the right price and consider the level of expertise you'll be provided. Book a call with me, further consultation on that. Mistake number 4 that people make is not having a professional dream team working for you. All right, so what does that mean? Well, who's your professional dream team that you should have working for you? A mortgage broker or lender, obviously you want the loan. A realtor, which is a buyer's agent for you. A home inspector, making sure what you're going to buy is going to fit your standards. And an insurance agent, you need to have it insured so that the loan can close. And you need to keep insurance throughout the life of your loan. So all these people come together to make sure that you can get the appropriate house for you. Mortgage lender, you need us unless you want to pay cash. If you're buying with a mortgage, you need insurance and an inspection, as I let you know. And a realtor knows the local norms and will work with you about your personal goals to find the great actual house or condo you want. They also bring value for negotiating and creating the offer so that it's accepted, and they provide support throughout that entire process from contract acceptance until you close to make sure that it goes and you actually get the home. It's really great. So mistake number 5 that people make is skipping a home inspection. This can cost you $20,000, but potentially much more. Instead of talking about it, I'm just going to show you a couple of examples of what could happen if you don't inspect. Renovation nightmare. Homeowner says that the realtor took 18 months to complete renovations. I don't know who the realtor is, but if you are going to need to complete renovations in 18 months, you want to know about that before you buy the house. Another one, copper thieves have stolen the pipes right out from under the home. Hey, if you're walking around up top, everything looks okay, but when you get that home inspection, they're going to catch anything crazy that could be a nightmare scenario, such as this. So skipping a home inspection, you can be purchasing a home unaware of those deal breakers. You will lose your negotiating power. Whereas if you have an inspection, you'll be able to go back to the buyer and say, hey, this isn't working. Are you going to fix it? Are you going to give me money? Or I'm getting out of the contract. So if you skip that home inspection, you don't get to do any of that. And you might buy something, you don't know how bad it is. So obviously do an inspection. And the next one is if you're buying a condo, don't make the mistake of skipping the condo doc review. That could cost $10,000, potentially much more. Some of the biggest things to look for in condo documents are there any special assessments coming up? Are there limitations on renting out the unit? You might want to know. Are pets allowed? If you've got a pet, you need to know how many, how large. What are the building finances like? Do they have huge projects coming up? Do they have enough reserves? How many units are paying their dues or not? Does the building have appropriate insurance? And a realtor can help you obtain and review these condo docs, but generally these are just a checklist of things you go over that you want to make sure before you buy that gorgeous condo that doesn't let you have a dog. So we are coming to the portion where I'm recapping what we discussed today. The 6 steps that you should, the 6 mistakes that you should not make as a home buyer. And if you get all these down, your home buying journey is going to be a lot better. First one, remember that there are first-time home buyer low down payment programs, and decide if you can take advantage of them or not, so that you know how much cash you need to bring to the table. Second, get a pre-approval before seeing homes, so you don't waste your time, and so that you know and can start to understand what you can afford, so when you see that perfect house, you can get it. 3, don't just stop at your bank for a mortgage. Check with a broker, such as myself, to get access to multiple lenders, including banks, to see what your best deal is going to be. Mistake number 4, make sure that you get your team working for you. This ensures you have what you need at a fair price in order to get that home. 5, do not skip your home inspection. And 6, if you're getting a condo, do not skip that condo doc review. Get those condo docs, check them out, and make sure that the condo fits your expectations. So now I want to ask you all in the chat, has your time on this webinar been well spent? I'd love for you guys to put that in the chat. It's going to make me feel like I'm getting some feedback. Thanks for the heart. It's going to make me feel like I can know that you've been hearing me and you feel like, wow, I spent an hour of my time listening to this and I feel like it's making a difference. Is it fair to say that using these 6 tips would give you a significant advantage when buying a home? And I'm not sure about what you knew about home buying process coming into this webinar today, but it'd be a safe bet that what we covered today was new and valuable to you. And do you feel more confident in being able to purchase a home after this webinar? If you could put yes or no in the chat, I know that will really make me feel awesome. Yeah, we got a yes. So if you're more confident in buying home, would you like to spend more time with me where my team and I are personally invested in your success? If so, I do want to remind you that I'm offering you these free consultations for a limited time with me to accomplish your home ownership goals. Go ahead and click the link, which you'll see in your chat box right now, to schedule your call. I cannot tell you how important this call is. Everything you've learned till now is giving you a base to jump off the diving board and to make a beautiful dive into the swimming pool. And you need to do that by talking to a professional such as myself who can help get that personalized plan for you. Now, again, when you click on that link, it's going to take you to a calendar where there's going to be many days available and many times, and you go ahead and search through all those days and times until you find one that looks comfortable for you, and then you go ahead and make that booking. It is that easy. I also have a QR code right here, and I do want to remind folks who weren't with us maybe at the beginning when I said this, but we are having a $25 gift card for drawing for a $25 Amazon gift card for folks who are active and participating in the chat. And so I see, you could have a really good chance of winning if you're participating in the chat, if you ask any questions. It's Q&A time, so it's a great time to enter yourself into the drawing by asking a question that's on your mind. And in the meantime, want to encourage you again to definitely check that link that's in the chat box, or, take a little photo with your phone, scan this QR code and go ahead and book me while we're talking about our question and answers that are following this session today. I'm going to start to scroll back up to the chat box to see what might have been there earlier. But before I do, I want to remind people that there are no dumb questions. There's no silly questions. Any question that's asked here is only going to ask everybody else. And I'm also going to say that folks, sometimes one question I get is, well, I'm not really going to buy a house for a year. I don't want to waste your time by making a consultation with you. And I want to share with you that anyone who's interested in learning more about personal finances, financially empowering themselves, how they can do better for their family, that is not a waste of my time. That is the reason I'm in this business. As you might have heard me, I came from a background very low earning, no savings, and real estate has been able to help me immensely. So if I can help anyone just by having a quick call, answering your questions here or in a consultation with you, I know that we're going to be able to get you a path towards home ownership, because around 65% of American households are homeowners. And we're here to make that 66%. We want you to be a part of people who are getting into home buying, so that you can have that kind of value stored up for you over time, for yourself and for your family, so that when you reach your golden years, you're not going to be surprised by needing to work until you can't work anymore. You're going to be surprised by, well, I've got this gorgeous home and it continues to serve me well. So this is a really important thing for folks who I'm speaking with today. And I would encourage anybody to go ahead and make that call. And let me go to the chat box because I see a couple questions coming in. I'm going to re-put my link there. So Lewis says, approximately what do lenders look for in bank accounts to determine how qualified a person is? And that's a really great question, Lewis. And so overall, we are looking at many things. We're looking at your credit score. We're looking at your debt to income ratio. So on the credit report, it shows up with all the debts that you're paying every month. And then we look at validating your income, which would be, for most people who have a pay stub type job, a job where you're paid every week, we're going to look at your pay stubs. Some people have jobs that are not pay stubs, business owners, consultants, freelancers. So we'll look at other kinds of documents that show your income, and we're trying to estimate how much you earn on average over a certain amount of time to see what that space is between how much you earn and how much you need to spend every month, and then to calculate how much housing could fit in there. And so once we can figure out how much that housing payment can be, that's what goes into to figure out how much you can qualify for. And it is hard to qualify if you have a credit score of 580 or less. So a lot of times if you have that, we're going to need you to start to work on some of those reasons and try and over time improve those. And a lot of times it can take a while, because it can take a while to dig yourself out of debt or to pay things off. But once you pay things off, the credit score report is very responsive to the actions you take. And, the algorithm updates every month. So that's not what takes a long time. What takes a while might be getting the finances together to pay things off. So that was a great question, Lewis. And I think that went along with the question that Gustavo had up higher, which was, what are some tips to, let me see, I'm going to scroll up there. What are tips that you have to improve my credit score before applying to a mortgage? So the main tips for improving your credit score is try not to be late on any of your payments. If you have anything negative on your credit report, you can know and you can find out by going to any sort of kind of website. I like to say a few. So if you're not familiar with where you can check your credit report for free, myfico.com, Credit Karma, NerdWallet, Experian. All of these are places where you can check it for free, and you'll be able to go in there and literally click on something that says report. Usually a report is anywhere from 30 to 80 pages long. It depends on how long your credit history is. And you can scroll through it and see thing by thing what's going on. And that's really important because you might recognize everything on there and that's good, but you might say, hey, that's not true. Then you can have that chance to gather information, call the credit bureaus, call your creditors, the people who say you owe them money, and to make corrections. So those are some things you can do to improve your credit, which would be get familiar with your credit report and then just try and make all your payments on time. And we still have a few more minutes for questions. So I'm going to keep checking the chat box, but I have a few questions ready to go right here for folks as well. One of them people have for me, which is maybe similar to Lewis's question, which is, how do I know if I'm ready to buy? Well, I think the best thing you can do to find out if you're ready to buy is to talk to a mortgage professional such as myself. I know that I kept telling myself for years, both subconsciously and then when people ask me about it, that I can't buy because I thought I couldn't. I thought I made too little money and I thought that I had too much debt. And luckily, I had someone in my life who said, no, please go talk to my mortgage lender and see what they can do for you. I was able to get a $400,000 duplex home in Washington, D.C. with my $45,000 job because my mortgage lender brought me to reality and let me know what I could do. So that is how you'll know if you're ready to buy. You'll talk to a mortgage lender, you'll find out what your budget is, and then you'll look around and say, hey, I can find houses that I like that are within that budget, and I'm going to do it. So that's how you know if you're going to be ready to buy. Let me see, one more question I got from folks is, well, should I continue renting or should I buy? This is a great question, and it's a very personal question. And we went over a general example during our presentation, comparing someone who decided to rent their whole life. Maybe they didn't decide to rent, but they never took the steps to buy something. So some people are like, well, I'm just going to keep renting. I'm just going to keep renting. 1 year turns into 5, turns into 10, turns into 15. And you've lost all that time that you could have been building equity. So should you rent or buy? First of all, keep in mind that example, and keep in mind the news stories that we're seeing everywhere, where half of older employees are saying, I'm going to have to work till I die. And know that buying a home can be a real hedge against that future. Now, should I rent or buy? I've focused on buying affordable homes in this presentation. When I say affordable, I use that number, like I told you, 300,000, because when I look around at how much rent costs and how much homes cost, I see that that is a price point where renting or buying is kind of equilibrium in today's market in Florida. Now you can go ahead and search that on Redfin or with your realtor to make sure in your specific markets. But I've looked that up in 3 markets in this presentation, and renting or buying seems to be, you can find equal costs, because a lot of us are dealing with a lot of costs in our lives, and rent is so expensive right now that you couldn't even imagine spending more than you're already spending on rent. So that is one thing that people definitely consider is for them and the house that they need, what's the monthly payment like? So those are 2 things I would say to consider if you're going to decide between renting or buying, is how much per month is renting versus buying in a house that you need. Be honest with yourself, but then lean a little bit more towards buying when you start to think about that person who's been a lifelong renter, arrives to retirement, has nothing to show for it, and often might not have as much savings because their money has been going towards the raising rents that have been getting raised for those past 30 years. So that's why I do this, because I want people to consider their individual situations and see if buying could really be something that's positive for them or not. And I wanted to ask people now one more time to just share in the chat box, if they could, after this presentation, how do you feel now? We kind of did a check-in at the beginning, and folks were maybe saying they were anxious or confused, did not know where to start. And I'm wondering how people feel now. You might feel a little bit more centered to say, wow, this is something that I can do. I can see that buying is within a similar amount of rent. Wow, I don't need to have as much of a down payment as I thought. And you might be feeling like, wow, I know the next step is really just to call Amanda, book that free consultation you see there. Again, we're going to put that in the chat. I can't say it enough, because if we hang up from this call and you don't talk with me again, you might miss that opportunity to find out what your budget is, to find out and determine what your plan is for becoming a homeowner, whether you feel like that's now or a year from now. I promise you that talking to a mortgage professional, you're going to get clarity, and you might even get that home much quicker than you thought possible. I know that's what happened to me. It changed my life. Having a duplex really improved my life. And it was an investment that I could never repeat. And so I want to be able to share with you what you're able to do and help you discover that for yourselves. So I'm going to see if there's any other questions here, but I want to thank you guys so much at the same time for spending your valuable time in the evening with me. I do hope you've learned a lot. I do want to encourage folks to check out my booking link, have that chat with me. We can keep it simple. We can keep it quick, as you heard. We're going to go over your strategy. We're going to take a look at your financial situation and give you an approximation of what you can do right now, or what you could do in a couple of months with some work on your credit. I just want to say thank you all so much for that opportunity. My team and I will be following up with you. We have the recording coming out to you, so you'll be able to check back for any information you thought was really vital. I would be so honored if I would have the chance to work with y'all again. Thank you so much for the hearts and claps I see coming up the window. That's so nice. It's so great. And let's just go have a great night. If you didn't yet, definitely do that booking. It's an easy click. It's an easy 2-click system, and I'll be on the phone with you later this week. So thank you guys so much. Thank you to Gustavo. Thank you to Ash, Lewis's iPhone, and iPhone. I love these iPhones that join us. It always cracks me up to see who is the iPhone. And we really hope that we'll be able to do something for your family and for you, for your future, and for your present. You deserve to know what you can do for home buying if it can help you. That's all we're doing here, is helping you with information. These consultations are free, and just see what's possible. So thank you guys so much for coming to the webinar, the Home Buying Masterclass webinar, and looking forward to connecting with you in the future. Thank you guys. Well, I'll see you guys later. Thank you so much one more time. Bye, everybody. See ya.